Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 3. This is Section B. This is an analysis topic. Exercise professional skepticism and professional judgment while analyzing information to be used as audit evidence, taking into account its relevance and reliability, authenticity, and whether such information corroborates or contradicts the assertions in the financial statements. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. Again, it's free and it is only 1 hour long, and we will teach you the key ingredients to passing the CPA exam. So make sure you don't miss that. Also, after you watch that, you're going to want to learn more. So make sure you check out becoming a SuperfastCPA Pro member. SuperfastCPA Pro members get access to the full 10-question versions of these 5-question YouTube videos. So in today's video, we're only going to be going over 5 questions, but SuperfastCPA Pro members will get access to the full 10-question video when we post it in the forum, so that the members can get a little bit more help and a little bit more understanding. Now, with all that, let's dive straight into the questions. All right, here we are at question 1. And something I will say is that these questions and this video has quite a bit of overlap with the previous video and the previous topic in the blueprint because it's very connected. So you might see a little bit of the same things in this, but again, we're kind of coming at it from a different angle, which is understanding how to use professional skepticism and professional judgment in kind of a more analysis type situation to be able to decide on the reliability and the relevance of audit evidence. So these questions are coming from that perspective a little bit more. So we're going to dive into question 1. One thing I always like to point out, and this might not be that helpful in this question, but this is still a very good habit to be in, is to read the last sentence of the question first. So if you see a question that has, a paragraph or multiple sentences, reading the last sentence first typically gives you context for what the question is talking about, and that will give you kind of an idea what you're looking for throughout the rest of the question as you're reading it. So again, you want to read the last sentence to get that context. Again, it's not always going to be helpful, but it's a very good habit to be in for test day. So let's do it here. Which of the following factors would most likely increase the reliability of this audit evidence? Let's go up to the top. An auditor is assessing the reliability of evidence obtained from a client's internal records. So again, which of the following factors would most likely increase the reliability of this audit evidence? So let's go through the options. Option A, the use of accrual accounting and a standardized chart of accounts. Option B, the preparation of financial statements in accordance with GAAP. Option C, the design and operating effectiveness of the entity's internal controls. Or option D, the use of a modern cloud-based accounting system with automated entries. Okay, so based on these different options, and maybe even based on watching the previous video, you might have kind of an idea what the answer is. But if you don't know, that's okay. We're going to use this question to start learning what increases the reliability of audit evidence. So let's go ahead and go to the explanation. All right, here we are at the answer. C, the design and operating effectiveness of the entity's internal controls. So that would be something that would make the reliability higher in this case. So let's walk through the explanation. The reliability of audit evidence, and we talked about reliability in the previous video, so we're kind of repeating this here. The reliability of audit evidence is most influenced by the source of the evidence and the effectiveness of internal controls over that evidence. When internal controls are well designed and operate effectively, the auditor can place greater reliance on the data produced by the client's systems. Weak or absent controls reduce reliability, regardless of the form that data takes. Factors like the accounting base, so that'd be like if it's accrual or cash, financial reporting framework, such as GAAP, or the type of accounting software used do not inherently make the data more reliable. These aspects affect how the information is recorded and presented, but not whether it can be trusted as audit evidence. Even highly automated or standardized systems can produce unreliable data if internal controls are deficient. So this is kind of a question reiterating what is important when it comes to reliability and what isn't necessarily important. While of course the accounting basis and the framework and all those things are important to understand, they aren't things that are necessarily going to make audit evidence more reliable or less reliable, whereas the thing that is definitely going to increase their reliability or decrease it is if the internal controls that are behind that audit evidence are strong or are weak. Again, based off of the previous video, we learned a little bit about reliability there, so this is again kind of continuing that. Now let's go to the next question. All right, here we are at question 2. Which of the following best explains why this procedure provides relevant audit evidence for the completeness assertion? So let's go up to the top. An auditor is designing procedures to test the completeness assertion for accounts payable. The auditor selects a sample of subsequent cash disbursements and traces them back to supporting vendor invoices and receiving reports. So again, which of the following best explains why this procedure provides relevant audit evidence? So we're learning a little bit about relevance here. Let's go through the options. Option A, it targets transactions recorded in the current period to verify their accuracy. Option B, it is designed to detect unrecorded liabilities by examining payments made after year end. Or option C, it uses documentary evidence prepared by vendors, which enhances reliability. Or option D, it confirms the cutoff of expenses at year end using cash disbursement records. So we're learning about relevance here. Think about these different options and, which one of them seems relevant to what we're talking about. And when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is B. It is designed to detect unrecorded liabilities by examining payments made after year end. So that's why this would be relevant. Let's go through the explanation. Relevance refers to how well the audit evidence relates to the specific assertion being tested and the audit objective. In this case, the auditor is testing completeness, which focuses on whether all liabilities that should have been recorded were included in the financial statements. By tracing subsequent disbursements, so that would be the payments made after year end, backwards to see if the liabilities were properly recorded in the prior period, the procedure is specifically designed to detect understatement, and that's a key risk with accounts payable. This design makes the procedure highly relevant to the completeness assertion. Now, option C was talking about reliability, not relevance. We talked about that in the first question. Option A describes a general test of accuracy, so not something that's specifically for completeness. And option D is more aligned with the cutoff assertion, not completeness. So we learned a little bit here about what makes something relevant to the audit evidence. And again, it's going to be things like audit evidence that relates to a specific assertion or to specific audit objectives, or even to maybe the specific timing of the audits, or even if the audit evidence is timely. Those are the kinds of things that will make audit evidence relevant. And that's the kind of thing that an auditor needs to know so that they can assess the information that is used as audit evidence. All right, with that, let's go to the next question. All right, here we are at question 3. Which of the following would provide the most appropriate corroborating evidence for this management representation? Let's go up to the top. During an audit of Fortner Manufacturing, management represents that a pending lawsuit is not expected to result in a material loss. Which of the following, again, would provide the most appropriate corroborating evidence for this management representation? Let's go through the options. Option A, a signed representation letter from management stating the lawsuit is immaterial. Option B, an internal memo from the company's legal department outlining the history of the case. Option C, a letter from the entity's external legal counsel describing the likely outcome of the lawsuit. Or option D, a verbal explanation from the CFO summarizing why the company expects a favorable resolution. So again, which one of these is going to be the best corroborating evidence for this representation? You probably already know the correct answer, honestly, by me reading through those. But if you need to, pause the video, think through this, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is C, a letter from the entity's external legal counsel describing the likely outcome for the lawsuit. Again, that one probably made sense. It probably wasn't too difficult. Let's read through this explanation to remember and understand what corroborating evidence is. Corroborating evidence is evidence obtained independently or from sources other than management to support or confirm representations made by management. Because management representations are inherently less reliable, auditors are required to maintain professional skepticism, meaning they do not automatically accept what management says at face value, especially when the statements relate to sensitive areas like litigation, estimates, or contingencies. The most reliable corroborating evidence in this case would be a letter from the entity's external legal counsel who has independent insight into the likelihood and magnitude of potential losses. This directly supports or contradicts what management asserts, or essentially, if management is telling the truth, it's going to support it. If they aren't really being very truthful, then it's going to contradict what they said. Option A is just a restatement of the representation, not a corroboration. Option B is still internal. And then option D is verbal and subjective, also internal, and does not improve the auditor's confidence. Only option C provides external, direct, and relevant support, making it appropriate corroborating evidence. And again, we learned about external evidence in the previous video, and usually external independent evidence that's given directly to the auditor is some of the best evidence that you can get. So it makes sense that if you want to have the best corroborating evidence for a management representation, you want to be getting it from an external independent source sent directly to the auditor so that you can kind of compare and corroborate the differences or the things that are the same between the management representation and what you received as the auditor. So again, when you want to corroborate evidence, external, independent, directly to the auditor, those are the things that are going to be the best corroborating evidence when you are getting audit evidence. All right, with that, let's go to the next question. All right, here we are at question 4. Which of the following audit procedures would best help the auditor assess the authenticity of the sales contracts? Let's go up to the top. During the audit of Stonehill Group, the auditor receives several large year-end sales contracts from management to support a significant increase in revenue. Each contract is signed by a customer representative and appears complete. However, all contracts were initiated and finalized near the end of the reporting period, and the auditor notices that the electronic signature timestamps on each document are nearly identical. So again, which of the following audit procedures would best help the auditor assess the authenticity of the sales contracts? Let's go through the options. Option A, confirming the contract terms and existence of the sales directly with the customers involved. Option B, recalculating the revenue amounts associated with the contracts to verify mathematical accuracy. Option C, reviewing the company's revenue recognition policy to determine if it aligns with GAAP. Or option D, comparing the year-end sales contracts to management's internal forecast for the same period. So based on these options and based on what we were talking about, what would the auditor do to assess the authenticity of what's happening? I think that, again, this happens very frequently in audit. If you read through these, one or two of them are going to make a lot more sense than the other ones. So narrow this down, think about this, and see if you can think of the right answer and come back when you're ready. Okay, here we are. The answer is A, confirming the contract terms and existence of the sales directly with the customers involved. So that would be one of the best ways they could confirm this authenticity. Authenticity relates to whether the information is genuine and not falsified, manipulated, or fabricated. In this case, the nearly identical electronic timestamps raise a red flag that the contracts might have been created or manipulated in a batch, possibly to inflate revenue. To evaluate authenticity, the auditor needs to go beyond internal documentation and obtain independent verification from the source, in this case, the customers. Confirming the contracts directly with the customers provides objective evidence that the sales actually occurred under the terms stated and were not backdated, fabricated, or altered. Option B is a basic recalculation that does nothing to verify whether the contracts are real. Option C is about accounting policy, not document authenticity. And option D compares internal documents and may raise questions, but it doesn't confirm authenticity. So the other options don't really confirm whether something is authentic, but if the auditor goes straight to the source, straight to the customers and verifies, did this actually happen? Is this actually true? And they're going to be able to figure out the authenticity much better from that course of action. So again, this is something that auditors are going to need to be considering. These are the moments where auditors are using their professional judgment and their professional skepticism to make sure that they're understanding the information and making sure that it's authentic and things like that when they are trying to make sure that they are using good audit evidence. So with that, let's go to the next question. All right, here we are at question 5. Which of the following best describes what ultimately determines whether the audit evidence is sufficient and appropriate? Let's go up to the top. An auditor has gathered a mix of internal and external evidence related to the valuation of a client's inventory, including purchase invoices, physical inventory counts, and industry pricing data. The auditor is now considering whether the evidence obtained is sufficient and appropriate to support the audit opinion. So again, which of the following best describes what ultimately determines whether the audit evidence is sufficient and appropriate? Let's go through the options. Option A, the audit firm's internal policies and procedures regarding documentation. Option B, the level of professional skepticism the auditor maintains throughout the audit. Option C, the quantity of evidence collected compared to the prior year's audit. Or option D, the professional judgment of the auditor based on the assessed risks and nature of the evidence. So again, what is going to be the ultimate decider if this is sufficient and appropriate audit evidence? Pause the video, think through this. I bet that based on what we've learned in this video and just your normal intuition, you could figure this out. So think about this, and when you're ready to come back, we'll look at the answer together. All right, here we are. The answer is D, the professional judgment of the auditor based on the assessed risks and nature of the evidence. So this is kind of like the crux of everything that we've been talking about. We've been talking about reliability, relevance, authenticity, all these different things. But in the end, what's the most important thing for determining the sufficient and appropriate of the evidence? It's the professional judgment of the auditor. So let's read through this. The sufficiency and appropriateness of audit evidence are ultimately determined by the auditor's professional judgment, considering the risk of material misstatement, the nature and source of the evidence, and how it relates to the assertions being tested. There is no fixed rule or volume of evidence that guarantees adequacy. Auditors must evaluate whether the evidence gathered is persuasive enough in context. Professional skepticism, that was option B, is important in how the auditor evaluates the reliability and relevance of evidence, but it is not what determines whether enough appropriate evidence has been obtained. Firm policies, and that was option A, may guide documentation, but do not replace professional judgment. And then comparing the quantity of evidence to prior audits, and that would be option C, is not a valid method on its own, especially if current risks differ. So, you're not going to be able to just base it off of that because things change each year with the audit. So in the end, the thing that is the most important is the auditor's professional judgment when it comes to evaluating the sufficiency and appropriateness of audit evidence. Now with that, we learned a lot in just 5 questions. Before we do anything else, let's do one more part of the SuperfastCPA process called pillar topics. Now the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up in the questions. You've seen 2 or 3 or 4 questions trying to teach you that professional judgment is the ultimate thing in deciding sufficiency and appropriateness of audit evidence, or whatever the case is. Again, you notice these things throughout the questions that you're doing that day, and so you take a moment and write these out in your own words as the pillar topics based off of the questions that you just did, so that as you're doing this each day, you're building your own personal repository of the most important things you learned from the questions so that you are ready for test day. So let's go ahead and take a look at the pillar topics for this video. Okay, here we are at the pillar topics. Let's just dive straight in. The reliability of audit evidence depends primarily on its source and the effectiveness of internal controls. Evidence obtained from independent sources and supported by strong internal controls is more reliable than internally generated evidence alone. The relevance of audit evidence is determined by how well it addresses the specific assertion and audit objective. Audit procedures must be designed to directly support the assertion being tested. So that would be things like completeness or valuation. And relevance can be affected by the timing of the evidence. If you get evidence that is kind of late, like you're already pretty much done with the audit, that would make it less relevant. Or maybe if it was for a prior year that isn't really relevant to the situation, depending on whatever the case is, timing would affect the relevance of the evidence. Now let's talk about the next one. Corroborating evidence is objective support obtained from sources other than management. Because management representations are inherently less reliable, auditors must seek independent evidence to confirm or contradict them, especially when judgments or estimates are involved. Now let's talk about the next one. Authenticity refers to whether the audit evidence is genuine and not falsified or manipulated. Auditors must analyze unusual features or patterns in documents and, when necessary, take steps to independently verify that the evidence is legitimate. And then finally, the sufficiency and appropriateness of audit evidence are determined by the auditor's professional judgment. That's kind of like the underlying base of everything. While professional skepticism and standards guide the process, it is ultimately the auditor's responsibility to evaluate whether the evidence gathered is persuasive enough based on risk and context. So we learned quite a bit about how auditors are going to analyze information used as audit evidence in this video. Again, we learned about the reliability, the relevance, about corroborating evidence, about authenticity, and ultimately about professional judgment. These are the kinds of things that auditors need to be considering and they need to understand to be able to, again, evaluate if they're going to use information as audit evidence. Now with that is the end of this video. We only went over 5 questions. Remember, SuperfastCPA Pro members are going to get access to the full 10-question version of this video so that they can get a little bit more help and a little bit more practice. So if you like this and you like our other videos, make sure you check out becoming a SuperfastCPA Pro member because again, you'll get access to the full versions of these YouTube videos. And the easiest way to do that is by actually going to SuperfastCPA.com and signing up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam. And after you watch that will give you a very good path to learning more about SuperfastCPA and becoming a SuperfastCPA Pro member. So check out the webinar, check out becoming a Pro member. I hope this video was helpful. If you did find it helpful, make sure to like it and leave a comment. I will see you in the next video.